Ms. Vibha Padalkar. She's MD and CEO of HDFC Life, joins us right now on the show today. Ms. Padalkar, great having you during our launch week. Thank you so much for taking the time out and being with us. Hope all is well.
All is well, Neeraj, and hearty congratulations on this beginning of a great new venture of NDTV Profit.
Thank you so much. Need you to come more often, must say. But let's start off with your broad brush view, Ms. Padalkar, on how do you see growth within insurance for the next few years? Because maybe companies were chugging out a fine trajectory, but then there were some tax changes, and while it may not have impacted the ticket sizes as much, there are question marks in the mind of the investor community about healthy double-digit growth can possibly be sustained over a period, never mind what could happen in a quarter or two.
I have no doubt in my mind about what you're asking for. And this is why I'm extremely confident about these levels of growth. Reason for that is nothing fundamentally has changed. Insurance and tax, while that might be a conversation opener, when you look at all the numbers in terms of low levels of penetration, when you look at demographic changes, disintegration of or evolution of from a joint family to self-sustaining mode, people living longer, health requirements only going up, health inflation continuing to be relevant, new lifestyle illnesses being there, pension increasingly understood as a necessity that people, the Sar Utha Ke Jiyo hypothesis. All of that means that nothing's changed in terms of the opportunity. And as our per capita GDP continues to move upwards, that inflection point, as we are beginning to see, will happen. Yes, there might be some twists and turns here and there that we have continually seen in our sector, but these are all growing pangs. And hence it leads me to believe that double-digit growth as well as many new opportunities. It could be as composite license, it could be as a step-down subsidiary in the insurtech space, it could be distribution of other products other than life insurance, similar to banks. If banks can distribute, why not life insurer and other insurers, so that we are really sweating every touch point of our distribution to reach the last mile. So hopefully that answers your question in unequivocal terms.
It does.
It does. So Vibhaji, so the tax sort of change came. You're saying it was just a footnote, a conversation piece, and then a lot more happened after that, including the Exide deal and taking over. Can you just tell us how that is panning out and how you are setting your sights on the entire landscape right now? What kind of a push is also coming with a very clear policy focus on increasing the penetration of insurance in this country? And how does a player like HDFC Life stack up in that broader picture?
So on your first part of your question, the first M&A in the life insurance space, done and dusted, and we were quite, I think, brave to venture out into this during COVID period. Also, thanks to our regulators, we were able to get approvals, various approvals on time, and now the two businesses are enmeshed, and the erstwhile business that we acquired is growing very well. In fact, as of today, it's growing faster than rest of HDFC Life. While we're no longer tracking it separately, like I said, it's enmeshed, but it's growing faster. So the very reason why we did this M&A is more than obvious in terms of top line growth, in terms of focus on tier 2 and 3 towns, as well as focus on aspects like protection in the non-salaried segment. For example, today, the erstwhile Exide Life channels have reached a protection percentage of whatever they sell at about 12 to 13%, which is double the company level protection number. So many such metrics of making inroads is there. Cost synergies are also done and dusted. So really the merger has now completely fructified in the manner that we envisaged. So that's the first part of your question. The second is in terms of how do we expand the pie. Thanks to the regulator, many things are now an opportunity and becoming a reality based on also what HDFC Life has in mind. All of you are aware in terms of India and all the states of India being distributed amongst all insurers, both life, general and standalone. health insurers. We, for example, have amongst other states also Gujarat, and working at a grassroots level. This is through the products of at a composite level. So it's a one-stop solution, grassroots level, being sold or would be sold through women as a village level entrepreneur. Um, so that's at the starting from the bottom. Also, when you look at the other aspects of ecosystem, which regulators talked about, Bima Sugam, and this would be wherein it's a platform, and insurers can directly offer solutions to end customer. It can also go through a distributor, not very dissimilar to mutual fund. And the whole intention is that people can directly connect with insurers, the manufacturers on a digital ecosystem. What do we get for it? We get to connect with the customer. We also get very rich data, hopefully, so that we are able to give a very bespoke underwriting, bespoke offer on the table. And from the customer's point of view, there is complete transparency, can compare, and so on. These are all very path-breaking opportunities that will pan out over the next 12 to 15 months. Last point I want to mention as to what keeps us busy, apart from these, is that we are the first ones to open our presence in GIFT City. And we have already launched and doing well in terms of dollar denominated products. So we have started off with a student plan in dollars. We are on the cusp of moving on to a health plan, and then we'll also move to a retirement plan. So these are the focus segments for the NRI population. And eventually, hopefully, also LRS will be allowed down the line. We will continue to engage with the regulators. So many, many new opportunities. Last point is the draft insurance amendment bill, which hopefully, as and when it sees light of day in terms of changes, that should hopefully give us opportunities to come up with a lot more innovative products and solutions.
Ma'am, just because you talked about the digital portion of it and the moves made there, just to understand, what is the proportion of pure digital onboarding right now?
For us, onboarding is close to 88%. So the way we see digital is not just as a vertical or a channel, it's now ubiquitous. It's across all our channels. So even a more traditional channel like a proprietary channel, largely the onboarding is through digital means. There's very little of non-digital. However, there's very little of end-to-end digital. So you'll find that in our own website or direct touch points, but that's about mid-single digits. This should increase as we start engaging with millennials. But even if you look abroad, end-to-end digital for a higher ticket size, more advisory based, I think it might not pan out. So some level of advisory, some level of self-serve, and so this phygital model is how I see this, at least in the medium term, and that's perfectly all right, because you do need some level of customization to one's own needs, and hence part advisory, part digital model is how I see things panning out over the next 3 years.
Vibha, the retail protection business for HDFC Life clocked in growth of nearly 45%. Is that momentum sustainable? And also demand for annuities, will that also increase with more NPS subscribers retiring over the next decade? It'd be great if you can share some data with us on that. What is the sort of outlook we have on the protection and the annuity business going ahead?
On the first point on retail protection, we see this as a big opportunity. We all know about the large protection gap, over 90%. We also know about what the pandemic has done to us in terms of people understanding that not having adequate levels of pure protection can possibly wipe out a family by a generation. So people are no longer asking as to why do I need it, which they used to ask maybe 5 years ago, or they used to say that this is a cost, nothing's going to happen to me. Now they're beginning to have conversations on how much do I need, what kind of products should I look at in terms of pure protection, and so on. So this is a kind of healthy journey that an average Indian is moving towards, and that's really what the numbers are showing, of between 40 to 50% growth. To your question on sustainability, some of this is base effect. However, I do believe that protection will grow faster than company level growth, as a result of which you will find that the share of protection will continue to go up. And in the medium term, like I mentioned earlier, in our agency channel, touching about 12 to 13%, company level should touch those kind of levels over the next 3-year kind of time frame, as more and more people and younger people come into the pure protection net. It'll take time, but I think that journey is inevitable, also with rising per capita income. As far as retirement is concerned, worldwide, pension funds are the largest asset pools and also fairly sticky. And I would envisage that our step-down subsidiary, which is HDFC Pension, that has crossed comfortably 60,000 crores of assets under management and perhaps larger than a lot of financial institutions, will continue to be a compounder in terms of their AUM, and compounding at anything between 40 to 60% kind of a growth rate annually. And we are the market leaders in this space. We'll continue to do that. What this does is this is a feeder into the parent company, which is HDFC Life's annuity business, because insurance companies are the ones that can give annuity that require large amounts of capital and hence reserves to write guarantees against that. So that will be a feeder. Stickiness is there. More and more people are coming into this net as we project it forwards. Government employees, that's another big one. They are increasingly comfortable looking at performance to move towards non-government, both accumulation as well as buying annuities from. So all of this, we are at this inflection point to catch a lot of this demand coming through. And I'm of the personal belief, while there's a lot of focus on protection, but I'm of a belief that actually pension and retirement solutions will become even more topical as an average Indian outlives their their retirement age by maybe 20, 25 years, and given where inflation is. So the risk of outliving one's savings is going to be more painful than perhaps even dying prematurely. Both are important, but the size is going to be very huge in terms of the opportunities on pension and retirement. So that continues to be our focus. But the point is that this is the tip of the iceberg. All of us in the sector need to expand the pie, and really that opportunity is there.
And as you always said, do so responsibly. Without there being errant competition. Just wondering, Ms. Padalkar, keeping all of these factors in mind, would you reckon that, one is what the business has to do and what the business will do and the country will do. Two is what the business metrics can show. So with all the factors that you've said, and considering that there have been tax changes, which a lot of people, while you say it's a footnote, but for a lot of people in their minds it's still landmark, do you reckon that APE growth of 20-25%, VNB margins northwards of 25%, inching closer to 30, as you probably earlier had, if I'm not wrong. Do you think these are possibilities for the future?
I would say our track record of consistently doubling every metric, top line, bottom line, embedded value, assets under management, and more than doubling on protection and retirement, we should continue with that track record, absolutely.
I just want to quickly get your views on this, and I'm sure you've talked about this quite a bit. What about the merger? How is that, of course, apart from the operational shift that we've seen, how else are you expecting this to impact business going ahead in the medium term?
So HDFC Bank is our parent now, and so there is also alignment in terms of our largest distributor also being our parent. And the closer working of not just us with our parent, but also our parent with other subsidiaries is clearly happening as it should. They have also articulated this. And from a bottoms-up perspective, while they have articulated that there will be open architecture, nevertheless, as long as we are the product innovator, we give the best service. There are 61 points that they track in terms of a holistic proposition to their customer. As long as we are right up there, I think market share will continue to go up because that would be the rightful way. And we've already demonstrated 600 basis points increase in our market share since they've become our parent. So we have to continue with being recognized as an innovator to give the different product solutions to HDFC Bank's customers, be right out there from a tech solutioning perspective, have trained presence at their branches and their branch expansion plans. With all of that, I think these synergies will continue to only increase. Also, the last point is from a group's perspective, how do they better service their customers? Because now with customer consent, they will have an end-to-end view of who this customer is, what their preferences are, what state of propensity for them to upsell, and so on. Only that can increase, and that's really as a group what we are working on.
Vibhaji, I was hoping we could talk a bit about business outlook as well. You've said you are positive on H2. It's going to be even better as far as H2 growth is concerned. I'm wondering if we could get some more details on that. Why do you think that's the case? What is your premium growth outlook for FY24 as well? And if you could just add some insight on how you see the business growing and the numbers.
Like I mentioned, this year is one wherein after being hit by a truck from a tax perspective, the entire industry is making that change towards the core of what we stand for, which is in terms of risk management. I've articulated mortality, I've articulated longevity, as well as solutioning that no other financial product can give, which is long-term fixed outcomes, very long term. We're talking about 15, 20, 25-year kind of predictable outcomes in terms of guaranteed products. So I think that shifting, and that when we look at it in a little bit more nuanced basis, below 5 lakhs continues to grow in terms of number of policies, in terms of inherent demand. Similarly, tier 2 and 3, which are relatively less affected by the tax changes, that is showing healthy growth. As expected, the wealth channels have shown a degrowth and continue to be a degrowth for both us and the industry. This is I'm talking about in other than unit-linked products. That will grow. That will continue to grow. I'm of the camp that it's a question of when and not if that segment will start coming back because of some of the product solutioning that only life insurers can provide. So while we wait for that machinery to turn, what we have said is double-digit growth, double-digit level. We are still gunning for those numbers. And if you were to look at number of policies, so if you just the last couple of months, the number of policies for us has seen a growth of 13% and market share continuing to go up in number of policies. So what that means is that we are able to engage with more and more customers, which was not the case, admittedly, for both us and the sector over the last 3 years before the tax changes. So the engine and the machinery that is changing is to connect with more and more Indians, to move more and more inwards into Bharat, so that you're engaging early, you are also solutioning it for them, you're also solutioning it from non-standard income proofs, non-standard other KYC. Similar again to NBFCs that are and banks that are in that geography, piggybacking on both HDFC Bank and several other banking partnerships that are opening branches in non-tier 1. So all of that means that we continue with a positive outlook. In fact, the sector was expected to deliver no growth this year, and I think both HDFC Life as well as the life insurance sector overall has positively surprised by giving just a little bit shy of double-digit growth. But I think if you look at, for example, number of policies, we've already crossed the double-digit threshold. So that's how I see this year panning out for the next few
Vibha,
months.
I'm glad you talked about the industry because that really does bring me to my next question. We've seen continuous disruption in the sector. Online policies, JV splits, foreign players coming in, exiting early, perception of the front end on push, having started a little bit on the wrong side, maybe a little more aggressive. When do we see stability and prospects of the industry now playing out? Do you think the time is now for things to start showing signs of easing?
I would put this down to growing up pangs, because for us to get to the seniority of say banking industry that has been around for a lot longer, most of this upheaval is for the good, wherein the industry will become increasingly resilient. So if you were to look at, for example, FDI, if you look at some companies, including us, listing, if you were to look at regulatory disclosures, and so on, and the business models evolving. COVID was another one wherein over 60,000 crores of claims the industry has settled, and largely we are unsung heroes, if I may say that. We settled that without a murmur, often with insufficient documentation, just because that was the need of the hour. So all of this means that the sector is becoming increasingly resilient. And last point is that with every upheaval, the larger companies, including HDFC Life, have actually become stronger. And if you look at one of the slides in our investor presentation, you will see that actually market share has increased with every disruption. So we are not afraid of disruption. We embrace it. Our business model has to be strong enough to both anticipate as well as take opportunities that disruptions bring in. And that's how we see this. But yes, to your question, largely, most of the changes that have to happen are out of the way. We do hope that there is some relaxation in terms of the 500,000 level in terms of taxation. But whether that will happen or not, I don't know. And only reason for my asking that is the levels of insurance penetration are still low. It is still a young sector, not yet completed 25 years of life. And like you mentioned, a lot of disruption. So a little bit of sweetener there will only help in increasing penetration levels, at least for a few years.
Is that going to be a pitch to Madam FM in the next couple of months?
It's going to be an appeal, yes.
Okay, an appeal, that would be the right word. Vibha Padalkar, absolute pleasure speaking with you, and you're right, the industry has been a hero post-COVID, there's no doubt about it. When people were in pain, the way you have also steered the ship of HDFC Life is completely commendable and has been recognized. Thank you. It's been a pleasure speaking with you today here on NDTV Profit.
Thank you so much. Thank you for having me.